Hello, traders. Gary Wagner with the Gold Forecast. It is Friday, approximately 11 o'clock here in Honolulu, Hawaii, on the 14th of January, with 1 hour left in the trading week. Gold is currently trading under pressure, down between $13 and $15 today, currently at $13.60. On today's daily report weekend review, I'm going to talk about the current position that we have, a basic strategy that I'm looking to employ, and what I'm looking at for the following week. All here on today's daily report, our weekend review. Traders, let's spend a few moments and talk about the trade that we're currently in. We did recommend and we entered a long position, 1375. That was back midweek, right in this area. We are looking at a 60-minute candlestick chart. So we can see this is where we saw that three-river Morningstar variation. And in fact, the trade started out and worked really well. As you can see, the market came up and it did trade around 1390. It did trade sideways for a time, and obviously over the last day, actually since last night, it has come down and is currently tracking at, as I said, 1359, 1360. So what is my sentiment? Well, obviously the trade didn't work out exactly as we wanted it to, and in fact we are under pressure. The stop that we have at 1348 was absolutely put there for a reason. If in fact this market cannot hold this one area, and you can see these lows right in here, our stop of course is right, it's actually below here, then really what we're looking at is a continuation of the correction that we started about a week ago. We have in fact not bottomed, and the market will probably continue lower. The other option is that the market does find a bottom in this area, and again we get somewhat of that double bottom. In other words, we find support in this area and the market moves back up from here. Now, what is our game plan and what am I looking to do? Well, obviously, if the market comes down and stops us out, it does just that. We took a trade, we took a speculative stab at the market, and we in fact got stopped out. Option number one. Option number two, it does in fact find a bottom in this area and begins to move back up. If we get a signal of that, and you can see right now that we do have a little bit of activity going on and it has come off the lows, then what I'm going to look to do is to dollar cost average next week and add to this long position to put us in at a more attractive price and look for the market to move back up. We will have to wait and see. My recommendation is we are going to hold on to this position. I don't want to raise the stop up. I do want to keep it there. I want to see if the market gives us an opportunity to find support, and if in fact it does find support, to dollar cost average and take a scenario, take lemons and turn it into lemonade, so to speak. In other words, take a market move that we did not anticipate and make it work to our advantage. On the other hand, if it goes and stops us out, that was our predetermined risk that we felt comfortable with when we entered the trade. Traders, I've taken our 60-minute candlestick chart, I've converted it to an average or a Henkin Ashi chart, the Japanese average chart. Reason that I'm doing that is I think that we can see that for the first time we see some sort of light of day in terms of that long side. We're first starting to get some green candles again, which is what we absolutely need to see if in fact we're going to see this market potentially find its bottom. In terms of fundamental news, there is absolutely some interesting fundamental news on the marketplace that we'll be taking a look next week. And I also believe that the long core fundamentals, the market is moving right now on the anticipation that the European debt crisis has, at least for now, gotten a more stable handhold or foothold. There was a remark by the German chancellor that said we would do whatever we have to protect the euro. The euro has been just steamrolling away. That's been really, really strong over the last week, and that's been causing this sell-off that we saw really starting yesterday into last night in gold. Lastly, I do want to talk about what I'm looking at for next week and my anticipation of different support and resistance areas. We have already talked about the fact that we feel real resistance right now is this 1400. There's no doubt about that. We had support at the 23% retracement level. If you recall, this is that Three River Morningstar variation that initially brought us into the market. Of course, the market did trade a little bit higher, but hit resistance right around just below the 1400 and is now headed lower. If in fact it cannot find a bottom in this area, if it does not find support in this area at the beginning of next week, as the market begins to trade and really digest any of the new news that happened over the weekend and the sentiment of what's going to happen next week, the real next logical point, if it cannot hold that area, I believe, is this 38% retracement level of 1325. That's really the next logical, very, very strong support level within the market. We will have to see what next week brings. Again, we're going to maintain our position. If we do get stopped out, we get stopped out. If we see any kind of bottom activity and we see a base being built and the market begins to break back to the upside, we will dollar cost average. So we have a game plan intact. If in fact it breaks through, we also have an understanding or a belief of where we believe this market might go to, which is 1325. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you on Sunday for the next market update. Bye-bye.